G'day traders, Mindset Reset. It's Free Cash Wednesday and FOMC Free Cash Wednesday. We've just had some explosive movement on the second part of the two-part FOMC release. Today I want to talk about three things that we've, some questions hopefully will get answered, but clarify some simple things. It's a Mindset Reset. A lot of questions from traders regarding frequency of trades, taking trades, and I made a point of saying in one of the posts that you want to focus on 90-10 best trade setups. And so one of the things that retail traders, day traders, try to do too much of is trade all the time and take trades. And I emphasize the concept of focusing on money-making setups, trade setups that make money, that go parabolic. Usually we'll have a coil, some kind of consolidation for an explosive move, whether that's a reversal or a trend trade. And that's where the trade setups are scalable, they're rinse and repeat, regardless if they're going to be an all-in, all-session trade, as we saw on the DJ30 and on the indexes on Tuesday. But think in terms of if you were managing a large fund, would you take these little wiki scalps and everything else if you're managing a large fund? And so obviously you're not going to go all in or all out. You're going to have multiple systems running and everything else, but you want to be focusing on asymmetrical risk reward. Paul Tudor Jones, in one of his interviews, said that he wouldn't look at anything that didn't offer him at least a 5-to-1 risk reward. And I talked about this. One of the biggest things I learned from Peter Brandt was understanding what asymmetrical risk reward is. I used to think I'll get into a trade and put a profit target at 5 times what my stop loss was. That's targeting asymmetrical risk reward. Well, it is, except that if your trade setup doesn't offer that in the mechanical geometrical expansion as a target, then that's not the same thing. So Peter Brandt, I talk about classical charting geometry for measured movements, targeting large expansions. We can get that on smaller time frames, 2-to-1, 3-to-1 for 90-10 parabolic session scalps. And people misinterpret that because it's a scalp, there's not much money on it. And I always say to traders, it's all relative to your account size. Session scalps for some of our traders are a month's pay for other people at their day job. That's because their account is larger. They know how to execute the trades. They're professionals. They've been doing this long enough, which comes back to if they're going to take a trade, and that size is relative. They still may only be risking 1 or 2% of their trading account on that opportunity. So trading, when you're trading a small account, a retail trader, they're trying to get consistent, they're trying to get profitable, they're always taking trades. And that's different than having trade setups. Like today we have FOMC, and there was some fantastic opportunities in the New York session. There were obviously gold today has broken out of that choppy, narrow range consolidation. We had an explosive short squeeze at the New York Open, coming out of the New York Open. We had a fantastic reversal trade right back into that after it took out the high of the week. And then, of course, we've seen the Fed go parabolic through the highs of that, perhaps trapping a shorts who maybe held on and didn't get out before the news. My point is this: train your brain to be okay with not trading if you do not see or have a 90-10 parabolic opportunity. And so that's different than me saying, okay, there's a high and a low. I'm gonna try and buy the low on the pound today or sell the high on gold today or whatever that is, unless it's an actual trade setup that you have in line with your own personal playbook that you know is a candidate for asymmetrical risk reward. So the opportunities that come over day 1, day 2, day 3 as we build into day 3 largely will be driven by other time frame traders. We got a 3-day consolidation, whether that's a 3-day setup, Friday, Monday, Tuesday, Thursday, Friday, Monday, or a day 3 parabolic opportunity in our midpoint range of a week in our Monday to Friday template. So important. Then you're okay with stepping back and just saying, okay, well, do I want to be at the screen later today for the FOMC? If that's part of your playbook, and we have a well-engineered 3-day template. So last month, or the last time we had FOMC, if you go back and look at the indexes, we had 3 days of drop, and right at the low of the week, a parabolic explosive move right after the Fed, 45 minutes, I think, after the Fed, or 1 hour after the Fed was released, from the low of the week to the high of the week in an opportunity that will not come back. And those are the sort of opportunities that are scalable and repeat when those templates show up. And that's where traders, if you're managing a larger amount of money or you're looking for your 5-star opportunities, the greedy bastard trades, those are the ones, the DBC, the don't come back trades, are the ones that I love because they're going to be there to the close of the session. So number 2, a lot of questions again regarding the 3-day setup videos that I've put up. You know, is this a new rule? Do you change the rules? Nothing's changed. We have signal days. We have first green day, first red day. We have inside days. We have 3 days of breakout traders in the markets. Day 1, opening range. Day 2 typically expands the range. That forms our initial balance, the high and low of a week. But we can have a 3-day setup on a Tuesday. As I repeat, 3-day setups are a large part of the playbook. Why is that? Because that enables us to be looking for a 3-day best trade candidate on any day of the week. That's different than a Monday, Tuesday, Wednesday. We could get a trade on a Monday that's come out of the Wednesday to Friday closing range for a session trade at the beginning of the week on our opening range day. So as opposed to just staring at an instrument and trying to figure out where to sell or buy, we look through our basket of instruments, maybe in Asia or maybe in London. We saw some fantastic day 3 parabolics in Asia. We saw the euro, the pound, blow off in the direction of the trend after pumping back up into closing price, consolidating, and London going parabolic back into the low of the week. So there's opportunities, and there was no major red news. There are opportunities every day. The 3-day setups are outside of Monday to Wednesday, Wednesday to Friday. That's the opening range, the midpoint range, and the closing range. Now, in closing, I want to emphasize, I really want you to understand the importance of Free Cash Friday. It's the closing range of the week, and we can often have range expansion opportunities on pairs, especially now we have a Fed week. We may have a large range day tomorrow, a day 2 now, could be a reversal. I don't know. I haven't looked since we've gone back. But because of the Fed, we can now get maybe a pump day for a dump or reversal day on Thursday, and Friday could consolidate. We could have a large range day tomorrow, though. We'll see how they set up. Point being is that the closing range of the week is where they'll either possibly see large reversal days. We could see trend continuation days. But the Fed now, heading into our closing range of the week, we've got a large, expansive, a range expansion day on the midpoint range of the week, as opposed to a consolidation day, which we saw last week on several pairs, because Tuesday formed a peak formation lower high on several pairs, inside days on a couple of pairs. They popped the top on Thursday, the day 2 into the backside for large 3-day setup parabolics. So think simple, step back, but target asymmetrical risk reward. 2 to 1, 3, even 3 to 1, unless you're getting a lot of really well-engineered templates. But think about the 5-star opportunities that present over day 1, day 2, day 3, when we get larger asymmetrical risk reward, and we can target 5, and in some cases 10 and 20 to 1. Indexes, oil, and gold. So often the session scalps, nail and bales, take the money and run. The larger templates, the 5-star opportunities, are where we can look for larger asymmetrical risk reward opportunities. Point being, don't feel compelled to have to trade all the time. Over trading, over leveraging, impulsiveness, especially prior to major red news. We can see some markets, currency pairs consolidate, tighten up. As I said, we'll see the range expand in Asia, the range expand in London, and then it looks like it's a well-engineered template, and they consolidate it into the Fed, and you can't get in and you can't get out. And if you're in, you wish you were out, and traders that aren't in are feeling trigger-fingered or itchy or a bit of anxiety because they want to take a trade. So step back, the backside of the week, we can see some fantastic parabolic trades on multiple instruments in any of the 3 sessions, and I want to reinforce this in closing. 1 or 2 parabolic trades that are 5-star opportunities in the week can double your trading account. And that's not over leveraging or over risking. That's because of the range expansion opportunities that those trade setups offer. asymmetrical risk reward, parabolic trade setups can grow a small account fast. Keep it simple, traders. Don't give anything back after you've earned it. Lock it in, walk away, come back and rinse and repeat. Best playbook trade setups show up again and again and again. That's the nature of the game. They repeat. You can scale them up in size and just keep things simple. Zero stress, zero emotion. Execute the trades, lock in the money, and get on with your day. Have a great day, traders, and may the markets go with you.